Ahead and get started for the afternoon session of the annual report and bookkeeping workshop. This is Haley Schrieffen from the Indiana State Library. Today we have Todd Caldwell and Susan Gordon from the State Board of Accounts. They'll be discussing year-end bookkeeping, and we will start with Todd.
Thank you, Haley. Good afternoon, everyone. It's a pleasure to be here. We'll go ahead and get started by just showing you our contact information. Great way to get a hold of us is emailing libraries@sboa.in.gov, or you can always call 317-232-2513, and whichever method you use, if we're available, we will take your call or get to your question just as soon as we can. I think I have this slide at the end as well, if you need it one more time. For today's discussion, we are going to talk about, I can't get this to click.
You need to click on the arrows there.
I don't want to, okay, thanks. We're briefly going to discuss the prescribed system of accounting. Then we need to have a discussion about funds, the naming of funds, the numbers, and the fund types. Many units, not just libraries, are using many different fund numbers across the state, and so we need to get back on track and have libraries reporting the same information for comparability purposes. Everyone, using for the standard funds, using the same number across the state. After that, Susan's going to go over information on what the enhanced regulatory financial statements and audit reports are going to look like for 2019 and beyond. Then she'll cover some year-end duties and items to consider. And then with whatever time we have left, I'll be back to discuss salary resolutions. It's that time of year when you're thinking about next year's salaries for your budgeting purposes and stuff. So we'll take a few minutes to go over some items that we get questioned about a lot, and maybe you haven't considered them for next year's salary schedules, and you can go back and make any changes or adjustments that you might need to. But we'll talk about that later. But for now, let's start with the prescribed system of accounting. And the slide that you see and the rest of what I'm going to talk about before Susan gets up here is all related. As you probably already know, the Board of Accounts is statutorily required to formulate, prescribe, and install a system of accounting and reporting that is uniform for every public office and public account. The standards we prescribe are to be in written form, and we accomplish that by publishing the Accounting and Uniform Compliance Guidelines Manual for libraries. In the old days, we used to mail that out, hard copy, to everyone when we would issue the manual, and then periodically we would have revisions. So we would send maybe 3 or 4 pages that we had revised, and you could insert those in your binder, take the old pages out. But now in the electronic age, our library's manual is available on our website by chapter, so you can view each chapter individually, or you can download the entire manual to your computer. There are other manuals on our website also. The Regulatory and Financial Reporting Manual, that establishes a consistent basis of accounting and reporting for local governments. It sets the requirements for reporting on a regulatory basis, which is defined as the basis of accounting that the reporting entity uses to comply with the provisions of a governmental regulatory agency, in this case was Board of Accounts. There's also the Internal Control Manual. You probably heard us talk about that before. But the Library Manual prescribes various accounting items. It does not currently, however, contain any prescribed method for numbering and reporting your funds and fund numbers. So that's what I want to focus on now, the funds, the names, and the fund numbers to be used for reporting. This is a list of funds that we're aware of that have been created by statute. I made a correction to the slides from last week when we did this presentation, and I deleted a couple of things. So if you happen to get it before then, or maybe you downloaded it from our website, you may have a slide that shows a payroll fund and a payroll withholding. Some units have that. Apparently after the discussion last week, not every library does. So I just removed it from the slide. We'll talk about it in a little bit. You may have some other funds on your books that you don't see here, and we've not taken exception to that. These are just the ones, the basic ones that the General Assembly has given authority for libraries to have. This is the same information. I just scrambled it up a bit. I put it in a different order. This one's by fund type, which I'm going to go over later what fund types are. I just wanted you to see them in this order before I showed you the fund numbers. So here they are with the fund numbers assigned, and you can see down at the bottom now I've added the payroll and payroll withholding funds in there. And those are going to be used if you separate your payroll functions out of your operating fund. So if some places will have a separate payroll fund and they might have separate payroll withholding funds. But like I mentioned earlier, several different libraries are using different numbers for the same type of fund, which makes comparing your data to other libraries across the state difficult, if not entirely impossible. I know when we looked at the same information when we did this for cities and towns, they have a fund called Local Road and Street. So they get money from the state, from various taxes that they can use for certain road projects. There were 99 different variations of fund numbers and fund names across the state for that fund. So comparing the town of Pendleton, the city of Indianapolis, or any other towns or cities in the state on what their local road and street funds were being used for, how much cash they had in them, that was not possible because there were just, you couldn't run any kind of query and gateway to get that information to see what people or units were doing with those funds. So that's why we're trying to get cities and towns back into line with their chart of accounts, and we're establishing the one for the libraries. And if some of you are looking at this and thinking, wow, my numbers are way off this, that's not necessarily a bad thing. So here's what we need to do. First, I'll show you, I've added the fund number and the fund type. There are different fund types. There's general, special revenue, debt service, capital projects, and clearing. We're going to talk about those here in a second. But what you need to know for now, going forward, is
Sorry,
okay.
Just one moment. I do want to point out that this is a newer version of the PowerPoint than what you may have found online. So we will be updating that after the workshop, but for now, if you are not seeing these slides in your papers, that it's okay. It's all right.
Thank you. Yeah, for this slide, and I should have mentioned I intended on each one that I updated, I was going to make note of that. So this slide might not look like what you had, because previously I didn't have the Evergreen Fund, and that was a discussion we had last week that most places have an Evergreen Fund, but not everybody does. So we went ahead and put it in.
What about a state technology fund?
The question in the room was about a state technology fund. I'm going to get to that in a minute when we get to that section. And there was a question online about explaining what a contractual service fund is or what it's for. I'll talk about that in a second as well. Yes, question in the room.
So you mentioned the idea of comparison among cities and towns and potentially comparison among libraries. Who do we think wants to compare us? Is it the State Board of Accounts, or are we talking other folks who would really want to be able to see library to library comparison to comparison?
That's a good question. The question in the room was, when we talk about comparability, who's actually doing the comparison? Is it Board of Accounts or other people? It would be the Board of Accounts. It's also the General Assembly. We have gotten questions from them when they're in session before about how certain funds are used in different places. And it would just be a member of the public, any constituent that wanted to see how their library operated or how much cash they had versus other libraries and what they use their monies for, would be able to see that. So it's a wide range of people that might be using it. There's a question online about regarding the gift fund. How do you separate restricted and unrestricted? Now, I think we'll get to that when we get into the fund types here in just a second. So let me go back to this fund. Going forward, the discussion on funds is going to refer to the prescribed name or the acronym. Like in this setting, we'd use LIRF instead of saying Library Improvement Reserve Fund or plaque. We'll especially use the prescribed numbers from now on. So those numbers you saw on the previous screen are going to be the ones that we're referring to going forward. On the annual financial report, libraries are going to need to start using the correct fund name and number. So if you can easily change the numbers on your computerized systems, you can go ahead and do that. You may want to check with your vendors first if you need assistance on how to do that. But you can keep your current number and your name on your ledgers if you like, and it would be easier or not possible to change it at this time. But when it gets to Gateway, when you're reporting the annual report, you'll need to use the standard name and the standard number. So for the plaque fund, for example, if you had that as Fund 210 and you noticed on the list, I just showed it as Fund 800. And what you can do is you can either change it in your system to 800 now, and you'd want to do that at the first of the year before you post any 2020 transactions. Or you can leave it as 210 in your system and change it in Gateway when you do the annual report, when you're submitting that. So in that case, if your system, your computerized system, is uploading data into Gateway for your annual report, once you've uploaded it, then you can manually go into that fund and change the fund number. So where it shows, if you uploaded in this example 210, you can go in and edit that and make it 800. And if you do that, if you're doing the manual editing to change it to the fund number, we would like to see some kind of documentation, kind of a bridge or a walkthrough of what your ledger has as the fund number versus what you reported. So that'll help the field examiners when they come in to do the audit, because they will start with what Gateway puts out in the annual financial report, which would show the plaque fund as 800. So then for them to easily find it on your ledger, they would know to go to Fund 210 in this example. Question?
Yes, so, and we are creators of a system that a lot of libraries use. So you're saying you would really like them changed, but then the report, so if they had an 800 that was a different number, it may say 800 on their monthly reports, their annual report will say a different 800. Is that okay with you?
Yeah, her question was,
You don't want to go in and change every voucher and every receipt because it won't match then what their monthly reports were.
right, you don't need to go in and change each voucher or receipt. The change I think we're talking about would be at the end of the year.
Okay. For next year.
For next year, for 2020, yeah. So the question was, if you showed it as Fund 800 in Gateway, but you had another fund that was numbered 800 on your ledger, would that be okay? It would be okay as long as you had that crosswalk to show us how that went back and forth, and you would not need to go back into your current stuff, your current claims and receipts and everything, and renumber anything. You would just have to manually edit the Gateway report. So you've heard me mention fund types. The use of the correct fund number and name is going to become increasingly important as we get into financial statements being reported by fund type. Susan's going to talk about that a little bit more, but just in general, starting with the financials in 2020, which will be on the annual report that is completed in the early part of 2021, the financial activity is going to be presented by fund type. And in those reports, each fund type is going to have its own separate financial statement. So if you're thinking, what are those different fund types and what do they mean? That's a great question, and we're going to take a look at that now. Before we get into that, though, where these fund types come from and why they're important is because they are defined and discussed in the Government Accounting Standards Board, or GASB, statement number 54. GASB establishes accounting and financial reporting standards for local governments in the United States. GASB develops and issues accounting standards through a transparent and inclusive process intended to promote financial reporting that provides useful information to taxpayers, public officials, investors, and others who use financial reports, and GASB statements are recognized by the Board of Accounts. So if you're super bored one time, and there's a link there that you can go see GASB 54, but that is where these fund types are defined. And these are the ones that GASB 54 defines. There are some I don't know that libraries will have very often, if ever. I think the ones that will be most common in a library setting is going to be a general fund type, special revenue, debt service, capital projects, and then fiduciary, which includes trust funds and clearing funds. So let's start with the general fund type. The general fund type accounts for tax revenues and other receipts that are not allocated by law or contractual agreement to another fund. Normally, there's only one such general fund type, and for libraries, it's your operating fund. The general operating expenditures of the library are paid from that operating fund. Now, for each fund type that we're going to talk about, you'll see a screenshot that looks like this. It shows the prescribed fund number, which is 100 in this case, and the fund name from the slides that I showed you earlier. Some of them will also show in that middle column a gateway number. In this case, it's 101001, and that's separate from the fund number. That's a number that Gateway assigns to these funds, to the standard funds. So when you first created your library in Gateway and did that first annual report, 7 or 8 years ago, the operating fund was given that number by Gateway. But like you'll see in the next few slides, not all of them have that, and I'll explain maybe why that happens. The special revenue fund type is next, and is defined as those funds used to account for and report the proceeds of special revenue sources, other than those for major capital projects, that are legally restricted or locally committed to expenditures for specific purposes. So the most common special revenue fund types found in libraries are the gift funds, rainy day, and any grants funds that you might have. So when we look at this schedule a little more, we've assigned Fund 200 as the gift fund, because that is in its statute that you can have a gift fund. To get back to the question that was from earlier about restricted and unrestricted, you can have multiple gift funds, and probably most of you do. I think those would fall in the second line from the bottom. Fund numbers 226 through 275, reserved for other special revenue funds. So if you've got unrestricted gifts, you can put those in Fund 200. If you have them that are restricted for specific purposes, you could create more than one fund for those types of items. You would just number them 226 through 275. And then we had a question in the room about grants, the state technology grant. Because that is a state fund or state grant, it would fall in the area 276 through 299. So if that was the first one you had, you could go ahead and give it Fund 276 and call it State Technology Grant Fund. For those types of things, because there's different grants and everybody gets them, there isn't a standard name. So the only ones that'll have that standard name are the ones that we've talked about previously, the operating fund, the gift fund, those types of things, levy excess. So if you have other funds that you create using these ranges that you see on the screen, you can give it whatever name you think is appropriate. Oh, there was another question too about the contractual services fund. So you can see that's Fund 202. I don't think many people use it, but it is authorized by Indiana Code 36-12-3-11A6. And that statute says what that fund can be used for. It's basically contractual services between two libraries, and there obviously would have to be a contract involved for some kind of service, but the accounting for those services would fall within that fund. So read that statute, and if you still have questions after we're done, you can shoot us an email, and Susan and I will try to get more in depth if you need to. There's a question online or a comment that the person typing it, my contractual is a 300 budget line item for contracted services, non-employee. This fund may be different than what you're talking about, where if you've contracted, let's say you have a cleaning service come in and you contract with them to come in at night and clean the library, you could pay that from your 300 budget line item, but that would be different than I believe the intent for Fund 202 contractual services would be. So you'd want to go in and look at that statute that I mentioned earlier, and you can see what that fund would be for. But I looked through several library reports and I didn't see anybody with a contractual services fund. You asked about what? If you have grants like private grant, if you have a private grant, I'd go ahead and put it in that series. Sometimes organizations will give what they call a grant to somebody, and it's really a donation. So if it's really a grant, like maybe you have some reporting requirements back to them on what you spent it for, you could put it in that series. Just keep all the grants, kind of together. We've just got federal, state listed there, but it could be a private grant. Yes, question?
If you do have grants that are funneled through, we have a separate foundation that's legally separate, and all our grants and our donations are funded through the foundation. And we categorize all those revenues in the gift fund.
So your library gets gifts through and grants through your foundation, your separate foundation, and you put all of that through your gift fund?
The question is, can we put all? Right now we have gifts and grants, but we really want to just have one fund.
Because she wanted to know if they can put that in their gift fund. And I think that would be okay. If you did that, because I think that would be more of not really a gift, but they are providing financial assistance for you to go out and do certain things. Are there any restrictions on any of that funding that they give you where you might have to track it separately so you can show them what you did with it? Or
We track each of, if they're specific to a project, we track the spending for that separately, but we still track it in the same fund.
Okay, so within that, you put it in that fund, and if there's a requirement for reporting, you're able to track that within your system on what you've used that particular money for. And have you had that for a while, or is that something new?
We have a new financial system that we implemented in
Okay.
2018, but we have had this tracking.
I think for grants and gifts like that, to do it in that manner, to put it in Fund 200 would be fine. If you wanted to have more than one gift fund, you could. I would think if you do have a federal or a state grant, though, we would want to see that in a separate fund. Yeah, another question. Okay.
So having a foundation is one thing for me to get a grant from like the community foundation or a Lily's grant that just gets funneled through my foundation, still spent by the library, versus my foundation giving my library $200,000. So when you ask the tracking question, I think that's part of what can make a difference in terms of what we do. So I understood what she said, I understood what you said. We keep it all on the foundation folks, as opposed to the library.
Can you repeat that comment?
I'll try. The comment in the room was there's a difference, maybe a difference from a grant that comes from the Lilly Foundation or some other group to the local library foundation that then gets funneled to the library itself versus the foundation itself giving a grant or providing funding to the library. And that tracking, Eli Lilly the Lilly Foundation may want information based on the money they've provided to a foundation and then onto the library. So that tracking is going to be important. Sometimes it might be easier to do it in a separate fund, but you could put it all in your gift fund. Not the bottom two. The next question online was, how do you separate an investment from a cash fund? And we had that question last week. The question last week was more of, they put money in Trust Indiana, and we wouldn't take exception if you accounted for that as your separate fund. I think you would use the series of 226 through 275 for that, in the case of the Trust Indiana. And then the next question, is it appropriated as part of the budget? And I think that refers back to, oh, no, it's not a question, it's a statement. It is appropriated as part of the budget. That goes back to that contractual line item, the 300 budget series, which I think is okay. The next question is, what about CDs invested in a bank? You don't know that you need to separate that in a separate fund. So if you've got a lot of rainy day money sitting around and you wanted to go buy a CD, you could do that with the rainy day money, but you wouldn't have to necessarily start a rainy day investment fund. When I was looking through some of those reports earlier, I see some people report on the annual report their investments within the fund. If you think back to how that looks, the beginning balance on your financial statements through Gateway is cash and investment balance, and the ending is the same. Maybe it's easier on your system or for you locally to create an investment fund to track that for whatever purposes yourself, but you wouldn't necessarily have to. But I've seen people that have. The one library I can think of had a LIRF investment fund. In fact, they had two. One had one CD in it, and the other LIRF investment fund had two CDs in it. So they had two LIRF investment funds on top of their LIRF. You wouldn't have to do that, but you could. And could I repeat where the Trust Indiana revenue should be reported? It could be reported in a separate fund. It would be that second from the bottom. Fund numbers 226 through 275. And then she says we've used the operating fund, LIRF, BIRF in the past for is that where you account for your Trust Indiana revenue? And I'll wait for her, or I'll address her answer in a second. Yes, she says. That's where you account for the Trust Indiana revenue. In each of those funds, I assume. So you have taken money from your operating fund and LIRF and BIRF and deposited it with Trust Indiana, and you've accounted for the activity of that within each of those funds. Yes, that would be okay. You would not have to have a separate fund that was for Trust Indiana.
You have a question in the room?
Oh, sorry.
I get lots of questions on interest. Is there a standard from the State Board of Accounts on, say, for instance, they have a CD that gets interest? Is there a standard for that? Should it go back into operating fund, or should it go into?
Her question was how to account for the interest on a CD. Would it go back? Would it necessarily go to the operating fund, or would it go back to some other fund? That's not directed by the board, is it? Do you know?
Yes.
It can be directed by the board. So your board can say designate where they want the interest to go. If they don't, I would think if you purchased a LIRF or a CD out of LIRF funds, that interest would go into the LIRF fund. But if your board wants to designate that to go to operating, they would just have to do a resolution to do that. The next fund type we're going to mention is debt service fund. Debt service funds are used to account for and report financial resources that are restricted, committed, or assigned to expenditure for principal and interest. Formerly, you might have seen this fund type called a sinking fund, but the terminology, the fund type going forward is going to be the debt service fund. So the most common types of debt service funds found in libraries, there's a bond and interest redemption fund by statute. If you've issued bonds or other types of debt, there's a requirement to have a debt service fund. You could use Fund 300. If you have more than one debt issuance, the 300 is the birth. If you have more than one debt issuance and you need more than one debt service fund, maybe when you issued those bonds, it required something separate. We won't take exception to you using a new one or starting a new one in the 300 series like with Fund 301. I didn't show that on the previous slides because those other funds aren't created by statute, but you can see the 300 is the bond and interest redemption fund, and then like I said, if you had others, multiple ones or ones that required to be separate from this, you could just create your own fund 301 through 399. And I mentioned earlier too, there's no gateway number here, and try to explain why that is. When Gateway was first programmed and created, the programmers and everybody involved realized that there would be multiple funds at different places. So like here, you might have just a bond and interest redemption fund, and you might have other debt service type funds. So they didn't want to get into issuing a specific number for this type of thing, whereas everybody has an operating fund. You may or may not have a bond and interest redemption fund, so that's why they left the number off there. Capital projects is next, and those are funds that are used to account for and report financial resources that are restricted, committed, or assigned to expenditure for capital outlays, including the acquisition or construction of capital facilities and other capital assets. Capital project funds exclude those types of capital-related outflows that are financed by proprietary funds, if you had any, which most libraries won't, or for assets that will be held in trust for individuals, private organizations, or other governments. The most common capital projects fund found in libraries is going to be your Library Improvement Reserve Fund, your LIRF, and a construction fund if you have one of those. So when we look at this list, you'll see we have LIRF and construction, and then a capital projects fund, which is created by statute. We have a few funds that are reserved for future capital project funds. If you have more than that, you can go up to Fund 410. And look at fund numbers 411 through 420. If you have a gift that is for a capital project, you would want to keep it in a fund number 411 through 420 so that you can separate it when we get to those fund types, because that would be a capital projects fund. So somebody gives you money to add on to the library, you're going to build a wing onto your library. That would not be a special revenue fund that we talked about before. That should be in a gift fund that's in the capital projects fund series of 411 through 420. The question is, why is there both a construction fund and a capital projects fund? The answer to that is they are both created by statute. So there's a statute that creates the construction fund and one that creates a capital projects fund. So because those are funds that are created by statute, we list them individually and gave them different numbers. And there was a question, where would we put bonds for renovation? So if you issued bonds to renovate, you get that money in, that's probably going to go in a construction fund, your Fund 401, or it could go in a capital projects fund, 402. So that's where the revenue would be. And then eventually you're going to be paying back those bonds that would come out of, on the previous slide, the debt service funds. You'll also notice on this slide, we have a Fund 421 for rainy day. If you have a rainy day fund that's established and your board has decided you're only going to use rainy day funds for capital type of projects, you would want to put it here and not with the special revenue funds and have it as Fund 421. And the same with grants. If you have any grants, whether they be federal, state, or maybe private, that are for capital items. You can use funds 422 through 450. Permanent funds are not that common, but they're used to account for and report resources that are restricted to the extent that only earnings and not principal may be used for purposes that support library programs. So because these are kind of rare, I'm not going to discuss those much further. If you run into something that you think might be a permanent fund, you can call us or contact us for guidance. Next up are proprietary funds. They're used to account for a library's business type activities by focusing on the determination of operating income, changes in net position, financial position, and cash flows. What you might experience in the library would be an internal service fund. I think those are somewhat rare also, but internal service funds are within proprietary are used to account for the financing of goods or services provided by one fund, department, or agency to other funds, departments, or agencies. An example might be if you were a super large library and you had just one section that was all IT, and other departments within the library use that IT section or department for their computer needs, and maybe the children's programming put money into a fund. Your reference desk maybe puts money into this IT fund, and then that's where the IT expenses come from. If they've got to come to the children's section or department and work on programming or new computers or something, you've created a fund that's really applying to your unit for your internal purposes. I use the IT section because the state is set up similar to that. There's the Indiana Office of Technology, and each agency, like the Board of Accounts, pays into annually the Office of Technology, and then when we have computer issues or IT issues, they come in and fix that for us and bill us for that. So that all that revenue, that accounting goes through an internal service fund. Again, these are probably pretty rare for a library, so if you've got one or you think you might have one, you can let us know. Someone's saying the slides are not advancing.
Okay, they are now.
Okay. And then Lori asked about sales tax fund, where would that go? And we're just getting to that. It would be a fiduciary fund. Fiduciary funds are used to account for and report assets that are held by a library in a capacity for others and that can't be used to support the library's own programs. So there's two types. There's trust and clearing. Private purpose trust funds are used to account for trust arrangements where the principal and income benefit individuals, private organizations, or maybe even other governments. An example might be a trust fund set up to benefit your library where you're holding the funds and you are able to use it at the library. Normally there's a formal trust agreement involved with those. Clearing fund is a new term for what used to be called an agency fund previously. Clearing funds are used to account for assets held by a government in a purely custodial capacity. So like your plaque fund, any withholding funds, if you set up a separate garnishment fund or a separate fund for your FICA, you're holding that for the government until you forward it on. And this is also where your sales tax would fall under. If you have a sales tax liability fund that you pay to the Department of Revenue periodically, you're collecting that sales tax on their behalf. It's not really your money. You're just holding on to it until you remit it to them. It would be a clearing fund.
Can that be for non-government, like health insurance? Is that where you put those?
Yeah, their question was, can it be for like health insurance withholdings? Yes, it could be for all of those. Might even be if you had if you took withholdings and deposited them in, let's say, made a deposit directly into like a savings account or something, some kind of, or made it To some other, retirement account, your perf stuff, yes, those would all be clearing funds and withholdings.
There's a question.
Oh, sorry,
Laura.
question.
And this is really specific to us, so sorry about that. So our foundation, again, can that be categorized as an equivalent to a trust? Or would our gift fund with donations from our foundation be considered a special revenue fund? Or would it be a fiduciary?
The question in the room had to do with the foundation and if that could be considered a trust. I'm not sure. We may have to have another discussion about that where there's more information. You don't have your foundation in anything accounted for on the library's ledgers, right? Okay, so I think the funding that they provide to you, like we talked about earlier, could go through that special revenue gift fund, unless they gave you something that was specifically for, capital projects. When we get to reporting by fund type in a year and a half, you'll probably have to show that as a capital projects fund if you had something like that, but I don't know how common that would be. So here's another slide that may be different from the information that you've received from the library or even from our website on clearing funds. The plaque fund is going to be Fund 800. Evergreen is going to be 801. And then a payroll fund can be 802 if it's separate from your operating fund. I think from the discussions we had last Wednesday, that wasn't very common with anybody that was part of that group. So they really weren't even sure what that was referring to, but some places you can set up a separate payroll fund where you transferred your salaries into this payroll and pay it out of that fund. I don't know how common that would be, but if you do that, you'll want to use Fund 802. And then any other clearing funds, including those payroll withholding funds we just mentioned, if they're separate from operating, or the sales tax. That would fall, your sales tax fund could be Fund 803 or all the way up to 850, just in that series somewhere. So summarize all of what I've given you in the last 40-some minutes. Here's a list of the fund types, the fund numbers, and names with the ranges in certain areas, and that goes all the way up through those clearing funds. So this is what we're going to be considering the prescribed chart of accounts for libraries. We're going to try to get this listed in the next bulletin that comes out in December, and there'll probably be a revision to the manual itself early next year. I don't have any questions online. Any other questions in the room? If not, I'll turn it over to Susan.
There is one
Oh, I
question.
got a question coming in. Okay.
Yep.
What are the trust numbers? Well, that's a good question. We haven't provided for those specifically because you may have a lot of them, or you may never have one. We wouldn't take exception if you put it, even though it's labeled clearing here. If you put it in 803 through 850, what we might do when we send out the bulletin with the actual list on it of the funds, we probably will try to address that in the bulletin so that either there's a range or something for you to use for trust funds. I have one more typing and then I'll wait. Oh, okay, the one in the room. The online one says, will changing our fund numbers require board approval or a resolution? I think we had that question last week too. No. You might want to inform them. I think especially if you're going to change it in your system. If you're leaving your numbers in the system the same and you're just going to edit when you get it in the gateway, you can wait until you do the annual report to let them know. But they should probably know, but they don't have to. We're not going to look for any kind of formal resolution or approval from your board. And then in the room.
Yes, so we historically had a separate bank account for our gift fund. Is this something that's required by the State Board of Accounts?
Her question was, they've traditionally had a separate bank account for their gift fund, and if that was required. And no, you could certainly do it if you wanted to, but it isn't a requirement that you have a separate bank account. The question online is, how do you match these to your banks? Well, that's going to depend on, I think, your system a little bit and how your system accounts for that. We aren't going to, the Board of Accounts isn't going to, but like if you have a bank account that has your operating fund and your LERF in it, and another bank account that has other funds in it, that'll have to be something in your system if you need to match those up. What we'll do at the end of any year is look at all of your bank accounts and do what we call an all-inclusive reconcilement. So we'll look at all your bank accounts, all your deposits in transit, all your outstanding checks, all miscellaneous adjustments, and then we'll come down to a total which should match the total of all of your funds. So matching it to your banks may be something that you have to tinker with internally, but it won't be anything. We're not going to look for matching it to banks. So I hope that answered the question. If not, why don't you shoot me an email and we can talk about it more. All right, I'll turn it over to Susan.
Hello, everyone. Good afternoon. What we're going to talk about next is two separate things. One is the changes to the regulatory basis of reporting and how that affects what you enter in Gateway. That's the primary focus today for that subject. And then next we'll go through some year-end duties for your offices. Before we get started, we always like to go through, at least show you the mission statement of the State Board of Accounts, dedicated to providing the citizens of Indiana with complete confidence in the integrity and financial accountability of state and local government. Obviously, that's why all of us are here, because we want to make sure that we do have that confidence, and that is the basis for the enhanced regulatory as well. Now, if you were here in June, you remember we talked about the enhanced regulatory basis of accounting and those changes that would be coming for 2019 and 2020. And a lot of those changes are pulling in elements of GAAP reporting. And the primary purpose of that is to satisfy the users of the financial statements, to provide them with the information that they need to make informed decisions. So to do that, we've enhanced note disclosures and added some note disclosures, and also changed the look of the financial statement. And we'll go over more of that in a moment. We have a lot of information on our website available for you, www.in.gov/SBOA. And if you look in the Hot Topics section, you'll find a lot of information on enhanced regulatory or regulatory changes. If you hit that schedule of regulatory changes there, it will take you to a chart like this. It's much longer than this. I just wanted you to see what it looks like. And in that, it's going to compare what current regulatory requirements are, and then how that's going to change in 2019 and in 2020. So we did talk about this in June, but if you need to go back and revisit that, it's a nice, concise list for you. Also, we've put together some guidance for libraries in a more narrative form for those changes that will be in 19 and 20. That is not on our website yet, but we'll be attaching that to the library bulletin in December. So you'll want to be looking for that. There's a lot of helpful information in there about what the changes are and where you can go to find the information you need for those changes. Also on our website, there are example regulatory reports that will show you the difference between what reports for 2018 and prior look like versus what they will look like for 2019. We do not have one specific for libraries, but there is one for districts, and that would be the same as for a library. So go ahead and take a look at that so you can see how the financial statement will look and what all the note disclosures will be. Also on our website, we have updated the Accounting and Financial Reporting Regulation Manual. If you're not familiar with this manual, it is linked on the library webpage under Manuals, and it contains information regarding objectives of financial reporting and fund accounting, information on the financial statements and notes to the financial statements, information on schedule of expenditure of federal awards and those notes, auditing terms, and then example financial statements and note disclosures. And we'll be covering part of that manual as well today. Back in June, you might remember this slide, which kind of recapped all of the 2019 enhanced regulatory changes. The financial statement will contain more detailed information. Instead of showing receipts and disbursements by total, the detail you enter into Gateway will be shown. For example, your receipts such as property taxes, fines and fees, and grants will be shown in detail now on the financial statement. And disbursements will be categorized by personal services, supplies, other services and charges, and capital outlays, rather than just the total that's been shown in the past. This will come down to an excess or deficiency of receipts over disbursements to arrive at an ending balance. The supplementary section of the report will be changing significantly. This is information that is presented as additional information but has not been subjected to auditing procedures. The schedule of capital assets will remain in that section for 2019, but the schedule of payables and receivables will be removed. The schedule of debt and leases will be placed in the note disclosure section, and then the schedule of receipts, disbursements, and cash and investment balances will be removed, as that is now the current format of the financial statement. The note disclosures are going to be added to and enhanced so that we'll have more information for the financial statement user. Those are listed on this slide for you. We're not going to go through each one today because we did that in June. But I only want to talk about those that are going to require a change in how you enter information in Gateway so that you can be prepared for that in February. So the annual financial report for Gateway is due February 29 of 2020, and there's the statutory reference there for you for that report. All of you are very familiar with this report, I'm sure, in the financial data by fund section. This section is not changing, but I have it here to show you that the information that you have on the detail behind that receipts and disbursements column will be more detailed now on the financial statement. The long-term debt schedule is changing, and this is a screenshot of what it will look like in Gateway. As far as I know, this is still in the testing area right now, so the content that I have on this screenshot is just test information, so don't let the content bother you. We just really wanted to show you what the format looked like. For your existing debt, you've already entered the information for debt class, description or purpose, ending principal balance as of December 31, and principal and interest due in the following year. But what's new for this year is the additions and reductions column. The beginning principal balance will roll over from the 2018 Gateway information. And even though that rolls over, please make sure you double check it to make sure it agrees with your records. You do have the ability to edit that beginning balance if you need to, but if you do, please make sure that you have a reconciliation available for the field examiners, because they'll want to know why the ending balance from 2018 does not agree to the beginning balance of 2019. You'll also need to enter additions, which is simply any new bond proceeds or bond issuances you received in the year. And then you'll need to enter reductions, which is the principal payments you've made during the year. And then that ending balance will automatically calculate for you and should agree to your records. There is a new question in Gateway on the unit questions for interfund transfers, wanting to know if your unit made interfund transfers during the year. An interfund transfer is a transfer that permanently moves money from one fund to another. It is not an interfund loan that needs to be repaid. You've always had to enter this information in the other receipts and other disbursements category as a transfer in or a transfer out, and that's going to stay the same. And you know that those two have to match, or you'll get an error warning from Gateway. But what is new is you'll have a schedule to complete now if you answer yes to that question. And what you will do is show the fund that it's transferred from, and then the transfer to fund, and then the amount for that transfer. Again, this is just a testing screenshot. It doesn't necessarily apply to libraries as far as the type of funds, but the schedule will be in the same format. Now, you won't have to type in the information for the transfer from and transfer to. Actually, there'll be a drop down there that you can select from your funds that you have at your library. That'll be the same for the transfer fund and the transfer to. Okay, for pensions, there will be a more detailed note for pensions now. And if you are on the system for Gateway, you can indicate if your unit offers pension plans to your employees. And then, excuse me for 1 minute. My husband would never believe that my voice has gone away. Okay, on that number 1 there, you can check those that apply. If you offer plans, offer a pension plan through NPERS, then when you are done with this screen, if that's the only plan that you offer, then you are done with the information to enter in Gateway for pensions. If by chance you would offer another plan, then there will be more information for you to complete, including the name of the pension plan, the statutory reference for that plan, terms related to forfeitures, whether or not there's an actuarial report to be uploaded. So that's the type of information you'll need for pensions if you have something outside of NPERS. Now, other post-employment benefits is new for this year. You've not had to enter this information before. You will have to have, if you have OPEB benefits, you'll have to enter the name of your plan and what type of plan it is and the benefits that are offered. And then you should have this information in your plan documents as far as the plan administrator, the number of participants, and the actuarial information. This does ask if there will be an actuarial valuation done or if you've had one done. If you don't intend to have one done or have not had one done, feel free to go ahead and answer do not intend to have one done. That's not going to result in an audit result and comment. It's just a matter of how the note is worded. Also, other information that will be in your plan, contribution rates and the cost method for funding purposes will be asked. Okay, for capital assets, we spent quite a bit of time on that in June. You know that for 2019, the new regulatory requirements will require that additions and reductions be reported for those assets that are capitalized. For 2019, that is still going to be in the supplementary information section of the audit report, but for 2020, it'll be moved to the note disclosures, and then there will be some additional requirements for 2020 that we will get into. We had a number of questions from the spring workshop on capital assets, and we do have all of those printed out and answered, and so we'll include those again in the next library bulletin. I wanted to go over 4 of them here, and if you don't hear yours, and then take a look in the bulletin next time. One of the questions was, do we have to update values annually? The answer to that is no. The assets should be recorded at historical cost, which is the cost that you purchased it for, or if it was a donated item, then at fair market value at the time it was acquired. What if we have to, and the next question is, what if we have to adjust the beginning balance? You can edit the beginning balance in Gateway, and we'll get to that screenshot here in a minute. If you do, and it's different from the ending balance that you reported last year in Gateway, just make sure again you have that reconciliation to show the differences between the ending balance of 2018 and the beginning balance of 2019, because our field examiners will want to take a look at that when they come in. Third question, if we adopt a new higher capitalization policy, what do we do with the assets on the ledger that are below that amount? And the example is if your capitalization policy was $500, so everything over $500 you put on your capital asset ledger. Now your board wanted to raise that to $5,000. What do I do with all of those now that are on there that are under $5,000? And in the year that your policy changed, you can show those as a reduction. And then the fourth question I have here is, can we just show a net difference between the beginning balance and ending balance as an addition or reduction? And the answer there is that a net difference would not be sufficient. We do need to see additions and reductions for each class of asset shown in total. So again, if you did not hear your question here, take a look at the next library bulletin. It should be in there. If you were with us at the June workshop, you know that a capitalization policy is very important. Hopefully you've had a chance to talk to your board about this to determine which assets will be recorded on the capital asset ledger and reported in Gateway for financial reporting purposes. Okay, here is what the latest information I have on what capital assets will look like as far as Gateway is concerned. You can see that it looks a lot different from last year. The types of assets or class of assets are listed in the column. And then you have beginning balance, additions, reductions, and ending balance there. The beginning balance information will be carried forward from December 31, 2018. So please make sure that agrees to your capital asset ledger. If you've made some adjustments and that beginning balance is not correct, you can edit that. Just make sure you keep that reconciliation available. Additions are just whatever purchases you made through the year of those items that are above your capitalization threshold. And then reductions are the disposal of an asset that you have made throughout the year. When you do dispose of an asset, you take it off of your ledger at the cost that it was on there for. So it should be on there for historical cost, at historical cost, and you would remove it at historical cost, not the sales price. Remember, for 2019, this information is still supplementary. It will be a note disclosure in 2020, but it's trying to be phased in now so that you have time to make sure you get your policies in place and make any adjustments that you need to make. And again, that is a testing site, so I realize it's not necessarily related to libraries, but it should look the same. It will look the same. Okay. For 2020, enhanced regulatory, again, we're going to put it in the notes section, so there will be auditing procedures applied to that schedule. It will still have beginning balance, additions, reductions, and ending balance by activity and class as it did in 2019, but there will be a figure for accumulated depreciation for depreciable assets in 2020. So if you remember in June when we talked, we suggested that you go ahead and assign an estimated useful life to your classes of assets, and hopefully you've had a chance to research that and establish some reasonable estimated useful lives for those assets. Your board will also want to choose a method of depreciation to be applied with that. So again, to recap that there is this schedule on our webpage, and please take a look at that. And again, the next library bulletin will have some additional guidance in it for you. Okay, now we're going to switch over now. Those were the changes for enhanced regulatory. We'll switch over to the end of year duties that we usually go over at this time of year. So we'll be talking again a little bit more about the annual financial report, although we've covered most of that. The Form 100R and Gateway, annual uploads, appropriation transfers, encumbered appropriations, cancellation of warrants, names and addresses to the county treasurer, and then some internal control considerations as we go through this. The annual financial report, again, due 60 days after year end, which this year is February 29, 2020. We've already taken a look at the updates for the enhanced regulatory. In regard to internal control procedures or considerations, oftentimes in a report we will see that the unit of government did not have a review process or a proper segregation of duties when it comes to the submission of the annual financial report or the financial reporting and close. So we suggest that if you don't have a procedure in place already, you get a written procedure for either segregation of duties or someone else to review that annual financial report information and compare it to the official record, and also have a written process to document that review that it took place. It could be something as simple as an email or a checklist or a reviewer's signature, a board approval, or however you'd want to handle that. But we do want to make sure that you think about a process to have that reviewed and compared, and also a documentation that that task actually happened. Also, at the end of the year, it's good to gather your information and then post and reconcile records to complete information for that financial data by fund section, again for capital assets. And by the way, in that library bulletin, we'll have some information again on how you can estimate historical cost if you need to, or where you might be able to find some of that cost information. Grants, long-term debt, we've already talked about that. Leases, we have not talked about yet, but that information will remain the same as it has in years past in regard to leases where you need the annual lease payment and the term. We also talked about pensions and interfund transfers. I do want to go over a couple of risk assessment questions. Now, along with it, when you do the annual report, you'll be asked a series of questions. I think there are 22 for libraries. Number 4, which this may be different than the PDF that I handed out earlier, the number might be. But number 4 is, does anyone review the completed bank statements? I just wanted to call it to your attention so that you can think about if you have a process for someone to review the bank reconciliation. I think that should say reconciliation, not bank statements. I'm sorry about that. But do you have anybody that will review your bank reconciliation, or is there a sufficient segregation of duties involved in that process? Again, written procedures on a review or segregation of duties, and then written procedures to document that that review took place, whether it's again a checklist or an email signature or some other method. And then the next one is number 20 that I wanted to bring to your attention. Have items included in the most recent SBOA report been adequately corrected? I just bring that to your attention because at year end it's a good idea to look back at the most recent audit report and see if you have any findings in there. And if you do, come up with a way to resolve those findings and take action on that. It's been a while since we've talked about repeat findings, but there is a statute that says that if you have a finding twice in a row in your audit reports, then you'll have to file a corrective action plan with our office, and we'd like to have you avoid that if possible. I'm sure you would like to avoid that. So if you have any findings that are unresolved in your audit reports, please give us a call. We'll be happy to walk through some ideas with you on that. The 100R, also known as the Certified Report of Names, Duties, and Compensation, is due January 31. There is no changes to this reporting. You'll just have the name of the individual, their compensation and department, and then their business address to enter for that. Also, at the end of the year, it's a good idea to go back and look through the monthly uploads that you've submitted in Gateway. Everybody's done a great job in working this into your routine. As you work through year end, just make sure that all the months are accounted for. Obviously, you're not going to have anything for November or December because they're not due until 2020. But just go back and make sure that for each month you have a bank reconcilement, board minutes, and a funds ledger entered in there. Annual uploads is the next section that I have to cover. Oftentimes this gets lost as you're not lost, but overlooked in the shadow of getting everything ready for the AFR. So I want to make sure you're aware that there is a requirement to do annual uploads in Gateway by February 29 of 2020. The first thing that it'll ask for is a bank statement. This will be your December 2019 bank statement for each bank account that you have. You're not required to upload images of checks, although you can if you want to. And this is also not the place where your reconcilement goes. It will still be with the monthly uploads as it is every other month. Also, we ask for an outstanding checklist, which is a detailed list of checks that are written but have not cleared the bank, and that total should agree with your reconcilement. You want to include the check date, the check number, and the check amount. Also, an annual upload is for your investment statements, which is similar to your checking account statement. It would again be December 2019 for all your investment accounts. We'll ask for a detail of receipt activity. If you have hand-posted records, this requirement does not apply to you. But if you have a computerized system, most of those systems have the ability to generate a report or history of receipts. And so please check with your vendor if you're not sure about that. It is preferred if you could upload that in the form of an Excel file. It just allows our field examiners to more quickly plan for the next audit. And it should include your receipt numbers. Detail of disbursement activity also does not apply if you have hand-posted records, but if you do have a computerized system, hopefully you can run this report. It's a listing of all non-payroll disbursements that have been issued and posted. You want to make sure you include your check numbers and vendor names. And again, an Excel file is preferred. We'll ask for the current year. Now it says current year salary ordinance, I think, but of course libraries have those resolutions or schedules. Go ahead and scan and upload your 2019 salary resolution or schedule and any amendments that you have there that are in effect at the end of the year. Also in this list of uploads is a vendor history report. This one does not apply if you have hand-posted records, but if you have a computerized system, please include a detailed listing of all the vendors to whom checks were issued during the year, and that would show a total by vendor of payments made. Correct. It is the totals. No, I'm sorry. Maybe I misunderstood your question. It's a detailed listing of all the vendors to whom checks were issued and that detail coming down to a total. Yes. as far as, oh, yeah. At this time of year, we're often asked questions about appropriation transfers. You're coming down, you're a little low maybe in one area, or you estimated high in another. The appropriations, sorry. You are allowed to do appropriation transfers, transferring from one major budget classification to another within your library. It needs to be determined by the board that that transfer is necessary, and this is a transfer of appropriations. A transfer does not require the expenditure of more money than the total amount set out in the budget. It's made at a regular public meeting by resolution or ordinance by resolution, and the transfer can be made without notice and without approval of DLGF. So keep that in mind as you're coming down toward the end of the year with your appropriations. Also, encumbrances. If you have items that are under purchase order or contract, any amounts that are unspent, you can carry those forward into 2020 into the corresponding account. What you will need is to have the library board make a list of those and approve that at the final meeting of the year. If you do that, then the 2020 budget will not be expected to stand any expense that's not anticipated in making that budget. When you do encumber appropriations, you need to be careful to use those encumbrances only for the purpose for which they were carried forward. Yes, I'm sorry, do you have a question? The question is, can we encumber funds raised in 2019 for use to obtain a state grant in 2020? Do you have an outstanding contract or purchase order for that? That would be the only way I would know to be able to encumber those. We'll wait for that to come in. Oh. Matching funds. Yeah. No, at least from what the information we have here on the screen, those would not be encumbered. You would need a contract or a purchase order for that. But if you have something different, please feel free to email us about that. Okay, cancellation of warrants is also a year-end responsibility. All checks outstanding and unpaid for a period of 2 years as of December 31 shall be declared canceled. So as an example, if you have a check written on February 27 of 2017 that has not yet cleared the bank, it would be considered canceled on 12/31/19. If you have a check that was written on November 2nd of 2018 and has not cleared the bank, then it would still remain on your outstanding checklist that you have at 12/31/19. On March 1, you are to prepare a list of your outstanding checks that are for 2 years or more and file that list of checks with the library board and then keep a copy of those. Old checks are receipted back into your ledger into the funds from which they were originally drawn and then removed from the outstanding checklist. And if you can't determine what fund it came from, then you can put it in the operating fund. Another end of year duty we'd like to remind you of is providing a list of employees who have money due them from your library to the county treasurer, which is required by statute that's listed there. This would be your employees that have money due for their salaries, for example. The county treasurer takes that list and makes sure those listed are not delinquent in the payment of property taxes. But if the county treasurer finds that that person is delinquent, then they'll notify you, the county treasurer will, and then you should make deductions of money due that person to satisfy that. Okay, just some reminders here on internal controls. I would imagine that everybody that's listening and in this room has had their library board adopt the internal control standards that are on our webpage, and you should have a resolution stating that. Your library board's responsible for adopting those standards and also responsible for making sure that your personnel receive training concerning those internal control standards. Now, the adoption of the standards is a one-time thing, but personnel receiving training, that you do have to make sure that your new people that come in receive training on internal controls. Every person that is considered a personnel is required to take that training just one time. So those people that do need to be trained are those who receive, process, deposit, disperse, or otherwise have access to funds. So make sure if you have anybody that's newly hired this year that they have received the training that's on our webpage, and also that you have documentation that they have received that training. You will have to certify on the annual financial report in Gateway that the standards have been adopted and that training has been received, and it'll be on the AFR unit questions here. Also at year end, it's a good time to go through those controls that you've established, those procedures you've established. Make sure that everything is reviewed, review it and document it, that you not only have documentation of what your procedures are, but that you have documentation that they're actually being performed. Evaluate their effectiveness and make any changes that need to be made. Is there any questions? Do I have a list? No? Oh, yeah, there's a question.
I'm sure that I missed something. As you were talking about the receipts and disbursements, uploading detailed receipts and detailed disbursements, would this be the first year you did that?
No, the question was on uploading detail of receipts and disbursements. Is this the first year we've done that? And no, we did it last year. Yes, I think.
And all vendors as well.
Yes, if you have a computerized system, vendors as well.
So when the library reimburses me for conference attendance, that makes me a vendor.
Yes.
So all of this is going into the public section of Gateway, or it's going into SBOA?
The question is are these annual uploads going into the public section of Gateway or just State Board of Accounts? And it is just State Board of Accounts. It is not on the public site. It is purely for our audit planning purposes, so our field examiners can do their planning before they come. Are there any other questions? Okay. Oh, somebody's typing. Okay. We are going to have Todd come back, right, Todd?
Yep.
And talk about salaries. So I'll let you get. Oh, here we go. The question is, the internal controls training is only required once for any new employees. That's correct. Therefore, employees are not required to have the training each year. That also is correct. One time per person. We don't make you watch that twice. So that's a good thing. We do, however, though, always recommend that you continually update your employees on new internal control procedures, or provide them a training as you see fit. But that's the only one that's required by statute. Thank you.
It is not over yet, just in case you were wondering.
Yeah, you have to sit through me one more time. Next, I wanted to talk about salary issues. The salaries, the compensation that you pay your employees is a big topic. Everybody wants to get paid. They want to get paid the right amount. Bookkeepers process payroll and it's wrong. They're the first ones to hear about it. You can be off a couple of cents, and there might be some employees that'll notice that. And your your salaries, your benefits, what you pay can be a huge part of your budget each year. So you want to make sure you get things right because it is such an expense. You've also got reporting requirements to consider. You're reporting to the IRS, the Department of Revenue, your PERF reporting to IMPERS, Social Security. You've got to issue 1099s in some circumstances. And in some of those cases, if you don't do the reporting timely or you don't do it accurately, there can be penalties and interest assessed. So the whole salary things is quite important. So we wanted to touch on some of the questions that we get, some of the areas to consider when you're doing your salary schedules for the next year. The statutory requirements for libraries can be found in these code sections, 3612-2, 21, 22, and 24. In 3612-221, the library board members serve without compensation, without being paid. The exception is the treasurer, who can be compensated under this section. 3612-22A talks about the library board shall annually elect a treasurer of the public library, and that person can either be a member of the library board or an employee of the library. However, the library director, appointed under section 24, can't also be the treasurer. So in section B, what you see on the slide, the library board fixes the rate of compensation of the services of the treasurer. And in 3612-224A and B, the board shall set the pay of the director, and then the board shall also employ librarians and other individuals that are necessary in the administration of the affairs of the library and set their pay, classify and adopt schedules of salaries, and determine their duties.
I did want to say something about the appointing who can be treasurer for the board. And we had the question the other day come up, can the library appoint as the treasurer someone who is like an outside accounting service?
That would be something to discuss with the library attorney for sure, but I don't think so. It seems like the statute says it's either a member of the board or an employee of the library.
Okay.
So the statute you see on the screen talks about adopting schedules of salaries. We like to see a salary schedule or a formal resolution, either one, something adopted by your board in a public meeting that would set out those compensation of the employees. Also, the library manual states in Chapter 1 that all compensation paid to employees and officials must be included in a resolution or schedule adopted by the governing body. So statute requires it, our accounting manual requires that you have a schedule or resolution. So what kind of things do you need to put in your schedule or resolution? Well, I just read that the manual says that all compensation has to be in that. So when we talk about all, we're talking about the actual salary, any benefits, those types of things. You can see on the screen some things we would like to see included would be the base salary or the dollar amount, longevity pay, if your board is going to pay that, bonuses, overtime, how that's going to be paid. We get questions on the longevity and the bonuses sometimes that yes, you can pay those. It just has to be part of that schedule, as I said, and be fairly detailed in how you're going to do that. Longevity, if it's going to be $100 for every year of service, it can say something as simple as that. Bonuses, sometimes that doesn't come up until the end of a year. And maybe it's been a good year financially, your board's got some money on hand that they want to compensate everybody for the good work that they've done during the year. You can go ahead and pay that. You might have to amend your salary resolution or schedule if it doesn't already have for bonuses provided for. And going forward, like for 2020, if the board knows they want to give bonuses at some point, next year, they can go ahead and put that in there now. But a lot of times, the questions we get are toward the end of the year, and they'll say, our board wants to pay bonuses. Can we do that? And yes, you can if it's in the salary schedule, and if not, they just need to amend it to include it. On the right side of the screen, leave benefits. Indiana Code 5-10-6-1 does require that leave benefits be set by a library board. Again, the salary resolution or schedule is a great place for that. It can be in a separate resolution. If they previously said we're going to give vacation leave at a certain rate, or sick days, or bereavement, or whatever, that can be in a separate resolution. So all that information doesn't have to be in your salary schedule each year. It can refer to something else. Yeah, the question in the room was like personnel policy. Yes, that's the next thing I have in my notes. Your resolution can refer to your personnel policy if that's where that's included, as long as that personnel policy was adopted at some point by your board.
Is there a sample of this salary resolution that we can look at?
There was a question if there was a sample. I know we don't have one. Haley, do you know if the library has one? I was thinking they did.
Okay, so let's see.
Yes. They should be, yes.
I don't see any examples on our website right now, but we probably have some in our files. So if you are looking for an example of that, shoot me an email and I can send you one. So that is HT as in Thomas, REF as in Frank, UN as in Nancy at library.in.gov. And that will also be up when your LEU certificate pops on the screen for those following along online.
Another area you might think about if you've got a neighboring library that you communicate with, or that maybe they have a schedule, you might ask to see theirs, to use it as an example, and maybe you get 2 or 3 and take the best parts of each one that you like to model yours after. You can do that as well.
Few comments.
How
There's
do I
one
see the
above
top
that.
of that one? Oh, I could have done that, sorry. There's a question online that says, our salary schedule shows ranges for each position, but the slide seems to indicate that we need to include each incumbent's pay in the resolution. You can use ranges. We haven't taken exception to that. I'm going to talk about that in a little bit, about if you have a range and determining where someone falls within that range. Someone's got to make that determination, but you can use ranges. So if your salary resolution says a certain position is going to be paid $10,000 to $15,000 a year, or $10 an hour to $15 an hour, those are all permissible. And then our salary schedule shows ranges also of our each position, and then we have policies addressing the items on the slide. Okay. And then next is which is at what each employee will be earning in 2020, or what our salary schedule is for 2020. Well, it's going to be what you're going to be paying and or providing your employees for 2020. So it's not only going to be the salary, but it will be any other benefits that you provide needs to be included. So if you're paying health insurance, for example, you don't have to, the resolution doesn't have to be very detailed, and because that can be, different for different people, single, family, those types of things. It would just have to say the library is going to provide health insurance to full-time employees or all employees, or whatever you want to do. So I envision a resolution or a schedule that would say, here's a position, here's an amount or a range, and then below that, the board's going to provide longevity in the amount of $100 a year for every year of service, or $10, whatever. Bonuses are permitted as determined by the library board. If you pay stipends or overtime, I mean, so it doesn't, some of those things don't really relate to a position, though they will relate to more than one position or almost everybody. So Lisa, I don't know if that answered your question or not. I hope it did. Can we state within the resolution that other benefits are listed in the personnel handbook? Yes. You can refer to that personnel handbook as long as that handbook has been adopted by the board at some point. And then if they ever amend the handbook, it'll have to be readopted. But yeah, you can refer to that. You don't have to have all of those things in the actual salary schedule if they're in your handbook. And then we have policy online. We have policies for insurance, vacation, and other benefits. Plus, we have a salary schedule. Are you saying we also need to include the resolution showing the total amount of pay and benefits for each person working at the library? Not by dollar amount necessarily. So that's where if you're providing that health insurance and those types of things for each person, because that's going to be so different, we're looking for that the board has authorized health insurance to be paid for employees. And then during our audit testing, we can look at, okay, Susan over here has this type of a plan, and the library is paying so much toward that premium, and then Todd has, you know, something a plan a little different because he's single, and maybe maybe Susan's married. Those different dollar amounts don't have to be in the schedule itself. It's just that those benefits are being provided for. And then the next question is, our current pay schedule is twice a month on the 15th and the 30th or 31st. We are considering changing to bi-weekly. What is required to do this? Only reflect it in the salary schedule. Yes, if you're considering that for next year, for example, your schedule for 2020, you could just list in there that we're going to pay on the 15th and the 30th, and then the amounts that you're going to pay, those bi-weeklies. I'm going to get into that in a little bit as well. But I would think the last part of that only reflected in the salary schedule. I think that would be appropriate. I mean, as also, you know, it's going to be discussed at a board meeting, so it might be reflected in your board minutes. But if you're going to switch and pay on the bi-weekly, then you would need that in your salary schedule. And then on the right-hand side of the slide, when it says be clear on termination. So if you're providing vacation and sick leave, when someone leaves employment, are they entitled to their leave balance or not? If you're going to pay that out, be clear on that in your policies. If any unused leave rolls over from year to year, document that as well on whether it rolls over or it doesn't. And then how leave is accrued, like the number of days or the frequency. If you get one vacation day a month, or you get 2 weeks on January the 2nd, then you've got all year to use those 2 weeks of vacation. Just document how frequently that's going to be. And again, that can be in the resolution, but it can be in your personnel policy. So you don't have to do that every year. Just refer to the policy. And when you adopt your resolution or salary schedule, should be a consideration. We've always recommended a new resolution be adopted each year for the next calendar year. That helps ensure you have sufficient appropriations in place for the next year in order to meet payroll. If an ordinance is not adopted, our position is the prior ordinance would be the basis for payment. So if your board doesn't want to change anything, they wouldn't have to adopt a new resolution. They could just rely on the old one and pay from it. But if they want to give raises, let's say they give a 2% raise to all employees, it probably would be best to have a new resolution schedule with all that in there, as opposed to, well, our board minutes said the board decided to give everybody a 2% raise. If they did that for a period of years, it becomes harder to determine if someone's being paid the proper amount, because you have to go back to some base amount at some point in time and add up all those percentages over the years to get to what they're being paid. So just It's easier to do that each year. And it can be changed anytime or amended. So if the board wants to, in the middle of July, make some changes to the salary schedule, all it takes is their action, and they can amend it. Some other considerations. I haven't seen this very often, but I have seen it before where the name, someone's name is listed in a resolution. So if yours said that Todd Caldwell was a bookkeeper at your library, if I leave and you hire someone else, you're going to have to amend that resolution and put that person's name in there. And if you have a lot of turnover, you don't want to have to be amending that resolution or that salary schedule all the time with different names, so it helps to just put positions. Biweekly pays, mentioned that, or somebody had a question about that. We do recommend that's a good option to go with, having biweekly pays in your resolution as opposed to an annualized amount. You don't have to worry about the number of pays in a year, whether it's 26 or 27. You just need to be concerned that you've got sufficient appropriation set aside for that. And then on ranges, as I mentioned earlier, you need to have some documentation of how it's determined what each person who has a position that's a range gets paid. So if Susan and I both work at your library and we're in the same position and the range on the schedule is $10 an hour to $15 an hour, and Susan gets paid $15 an hour and I get paid $10, someone's made that determination somewhere. And we would want to see how they determined that. We want to make sure when we're doing an audit that each person is getting paid the right amount. So just have some documentation. If the library board has delegated that to the director, and the director would have something maybe in a personnel file that says Susan's going to get $15 an hour because she has an advanced degree, she's got 10 years of experience, to my 2, something like that. Are there any other questions, either in the room or online? And while you're thinking about it, anybody notice what I did there in that picture? It's a question mark made out of books, and you all are libraries, so I thought that was clever, if I do say so. Oh, we got a question coming in. If the library is unionized and salaries are negotiated, how do you indicate that on a schedule? That's a good question. We'd recommend just having those positions listed for those people that are part of that union contract, assuming it's not everyone, and then we would refer to the negotiated contract would be what we would audit to, that you were paying in accordance with that schedule or contract. And if you have any other questions, you know where to find us. So thank you for your time, and I'll turn it back over to Haley.
All right, thank you so much, Susan and Todd. In a moment here, I'm going to put your afternoon LEU file into the window to download, and Wendy Knapp is going to be filling us in on news from the State Library. But before I do that, I just wanted to thank the libraries that have been prompt in turning in their E-rate consortium forms. There are a few that I'm still waiting to hear from. That's Bell Memorial, East Chicago, and Edinburgh Wright Hagman Public Libraries. If you are from one of those libraries and you have not yet turned in your consortium forms, please contact me as soon as possible. And that's for funding year 2020, starts next summer. Likewise, for the State Technology Grant Fund, if you want reimbursement for some of your internet bills, you need to submit 3 months of internet invoices to me. Again, most libraries have done this. I'm still waiting to hear from Clayton Liberty Township, Converse Jackson Township, Danville Center Township, Farmland, Hammond, Jasonville, Logansport, Cass County, and Park County Public Libraries. So if you are from one of those libraries, please contact me and send me your invoices so that we can make sure you are reimbursed. Here you are, Wendy.
Thank you, everyone, for making it to the end of the day. You're real troopers. I just have a few things, then I'll let you go. First of all, as you are all are aware, we are canceling the OCLC First Search statewide contract as of January 1st. Given the latest data that we've gotten from OCLC, there are about a dozen public libraries that look like they might be heavily using First Search in some way. So if you are one of those libraries, Jake or I will be reaching out to you this week just to make sure that you're not going to lose any access. We're going to figure something out. We're doing a more right-sized contract that we've negotiated along with the academic libraries to start January. So we'll get it worked out, but we might be in touch about that. Also, the CERCS contract just went out for bid again, went through that process. Autographics will be the underlying software to support CERCS for the foreseeable future. The Collaborative Summer Library Program flash drive should have all arrived at your libraries. And we did find out that some of those were defective. So if you are one of the ones who got a defective drive, just let Beth Yates know and she'll get you a replacement one shipped right out. So just let us know about that. Also, the Collaborative Summer Library Program trainings are open right now. So go ahead and get signed up for those before they fill up. The Census Toolkit came out this week. So we're very excited about that. The very last page of the Census Toolkit has a really great, it's a great one-page thing that you could have out for at least for all your staff, if not your patrons, on why it's so important to complete the census. So I really like that. And then I think my last thing is that we're really excited. The State Library is doing our first ever story time focused on supporting children who are visually impaired or have some kind of seeing disability. So we're very excited. We're going to do that on December 14th. We're going to be reaching out to all the patrons that we know of through our Talking Books program. But if you know of patrons that would be interested in taking part in that, please let them know. Come here. It'll be a great day. We're excited about that. Anyone is welcome, but it is geared towards children who have some kind of seeing disability. So I think that's it.
All right. Thank you, everyone, so much for attending today. If you have any further questions, please contact us. Any updates to the handouts and also the archived webinar, those are going to be posted on the State Library's LDO workshops page as soon as they are available. And it usually takes a couple of weeks for the archive version to be up there. If you have any other questions,